Good afternoon. This is Tom Aspray with the Viper Report. It's Monday afternoon, August 3rd, about 45 minutes before the close. Been a great day in the markets. You can see Nasdaq's up 1.14%, S&P up 0.79%, Dow up 0.92%, and it's been a really nice run. If you look at the S&P chart, and I'll explain a little bit later, it had a really good run from the lows on the 30th. And there were specific reasons why we thought that was going to occur. Today, the advanced decline numbers are really strong, 1965 up and just 1030 down. So it looks like we should see a pretty strong close. I'll get back to the current market outlook in a couple of minutes. I wanted to point out there are links to two different articles I wrote for Forbes.com. My leap forward in technical analysis discusses the MACD developed by a late friend, Jerry Appel. And I made a modification of that to the MACD histogram, which is widely used. This was 30 some odd years ago. I find it particularly valuable in the interest rate market. This is a chart of the T-note yield. You can show that the green or bluish green level here is the histogram. You can see as yields are making lower lows in 2016, the histogram was making higher lows, turned positive. Yields had a 2-year run to the upside, peaked above 3%. Those of you who were looking at rates back then, remember that everyone said, okay, it's now going to go to 4. But the MACD has formed a bearish divergence, this line D. The MACD crossed below the signal line, and it's been lower ever since with no signs yet of a bottom in yield. So yields went from well over 3% to currently last week about 0.6%. In my weekend article, where there's also a link in the email, I talked about the monthly analysis and the big tech earnings. We have Apple, and showing with the MACD we just talked about, turned negative here in the fall of 2018, dropped back to these stark bands. These will really keep on the right side of the market. If you're thinking of bailing out of stocks like a lot of people were at the end of 2018, I was going, don't do it, and that's been the case. In that article, I also talk about the sentiment. The bullish sentiment last week dropped to 20%. That's typically seen at market bottoms. You can see back in October of 2019 and in December of 2018. And rarely does the bullish sentiment make a new low while the AD line is strong, but that's what we're seeing right here. The AD lines look strong. This is a monthly chart of the QQQs and the Nasdaq 100 advanced decline line. Turned positive on the end of March in 2016 and it hasn't looked back. It's been rising strongly since then. It is above its monthly Stark band, so we know when that happens that you're looking for a pullback here. So don't be greedy. The overnight action last Wednesday was very negative, suggesting a sharply lower open on Thursday. My work suggested that would be a buying opportunity. In last Thursday's Viper ETF and Hot Stocks report, I featured this chart, this daily chart of the SPY tracking the S&P 500 and the AD line. You can see this arrow indicates that the AD line had made a new high, and that was a very bullish sign, suggesting that the market should also make a new high. And this Monday afternoon, we're getting about 3% below it, so I think there's still 3% on the upside at least. That was a very positive sign heading into Thursday. I was looking at this hourly chart of the SPY, and I was going, okay, so gave a couple of buy levels in the open. You can see we gapped lower here, traded down to the lower Keltner channels, and it's been off to the upside. And then in Friday's special update, I said, well, if you break out above this 326.13 area, that completes the correction and you should move higher. We're trading close to 329 now, so next upside targets here is between 334 and 336. The hourly analysis, you can see, as Friday's close, volume surge, the hourly OBV is strong, everything looks pretty good. In addition to the ETFs, we recommended a stock like Salesforce CRM. You can see it gapped lower on Thursday, traded down to 187.37. Now it's at 204.17, having a nice run. We're going to take some profits probably here in the next couple of days in this one and tighten the stop up because it still is a trading market, particularly with the jobs report coming out on Friday. We're also still long gold and silver, though we have some profit-taking levels in place for both the GLD and the SLV. Getting a little frothy here. We're trying to move higher here again. The volume today is not as strong as it has been, so I'm looking for a pretty sharp pullback here. May not come this week or the next week, but in the next couple of weeks it's very likely. That should create another good buying opportunity. We've done a very good job of catching the swings in GLD in particular. Well, I hope you get a chance to read the two Forbes article. I think you'll find them informative. If you're just learning about technical analysis, the MACD HIS is a good place to start. I'm still doing a bunch of training. We have this if you want to see what the train is like. It's a low intro price of $199 for an hour and a half, just one-on-one with me. I'll try to teach you what you don't know. First of all, we'll have a conversation and see where I can help you. If I can't, we'll refund your money and we'll both go our merry ways. And of course, specific advice on either ETFs or stocks you can find at theviperreport.com. It should be quite a week in the markets, and I'll try to touch base with you over the weekend. Thanks.